May is here, and you're wondering, what stocks should I buy in the month of May? Is it sell in May and go away, or where are we at? Well, I've got 7 stock picks that I think are attractive at these levels and lower that are on my watch list for the month of May. Now, we're in an interesting spot here, and I won't be surprised if you see a sell-off, especially between now and, say, the end of summer. And historically, May is a weaker month, so I'm going to give you some price targets for each of these stocks and really levels that I'd personally buy myself for these stock picks. So 7 stock picks, rapid fire. Let's get started. So I do a video like this every single month, and I usually do one for growth stocks and one for dividend stocks. In a couple days here, there's going to be a dividend stock video as well. Make sure you subscribe and click that bell for notifications. If you're new here, welcome. The first stock I want to cover is Enphase. Now, this is one that's been on my watch list for a while, and I told the gang in the Discord community that I'd like to buy this stock if it sold off. We just had earnings here a couple days ago, and you can see non-GAAP EPS beats by 15 cents, so not bad. Revenue up 64.5% year over year, beat by 5.5 million. So what's the problem? Even the margins, 45%, not bad at all. The problem was guidance. It was a little bit lower than expected, and I think that the stock was just maybe too expensive for the market with the macro setup we're in right now. So you can see Enphase was down about 15% post-market on Tuesday. Enphase says it expects Q2 revenues of $700 to $750 million, and that's below the $760 million analyst consensus estimate. Gross margins lower, we just said 45%. They're expecting 41 to 44%, also going to come in below Q1. And you saw most solar stocks sell off for this news, so the question is, what level would you buy this stock at if you don't own it already? So Enphase is trading right now, guys, about $164 a share. PE ratio 48.49, much more reasonable than it was. Mid cap $22 billion. On the 52-week range, you got $339.92 on the high. That was December 5th, 2022. And the low we saw on May 12th, and that was $128.67. And this is May 12th of 2022. And you can see the day range here, $156.31. And it closed at 164, so it bounced pretty nicely. Now, where I'd be looking at this stock is preferably below $150, but you might not get that. I think you really have to dollar cost average with this stock, and $155 might be all right. Short interest is 4.5%. You can see Wells Fargo adjusted the price target to 230 from 281, so they cut that, maintain overweight rating. So price to sales ratio is 8.55. The PE right now, based on next year's estimate, says 22.3. And this says PE for this year's estimate 29.6. So this is getting attractive, and I do think below $150 for me, that's kind of a pound the table. That's where I'd be buying it. Anything really under $160 and dollar cost average is where I'd look at Enphase. So check it out. Ticker is ENPH. Next stock pick is Tesla. Now, Tesla reported earnings on April 19th. You can see non-GAAP EPS was in line at 85 cents. Revenue did miss slightly. It missed by $60 million. It was up 24.2% year over year. The reason that Tesla stock sold off, gross profit margin 19.3% compared to expectations of 22.4% according to 14 analysts polled. So I'll get to my thoughts here in a second. First, I want to cover some valuation metrics. Before I do that, Kathy Wood, of course, has a $2,000 price target on Tesla by 2027, which would be a heck of a return from this level. And the bull case there is really about robo-taxis. You can see Tesla loses bull rating at Jefferies due to margin worries. So Tesla's trading at about $164 a share. Now, 52-week range, this in January 6th, this was $101.81. 52-week high was May 4th, 2022 at $318.50. So 47 PE ratio, this was a $1 trillion company. Now it's half that. It's $507 billion market cap. So price to sales, 5.87. Next year's estimate PE ratio, 33.3. So here's the skinny on margins and why it matters so much. Tesla has been cutting their prices to stay competitive. The problem with that is you've not seen the volume in sales to basically make up for it. So if I'm a Tesla shareholder and you're cutting the prices in order to compete and to sell more cars, and that volume isn't spiking where I want to see it, well, that's going to put pressure on it, because your number one differentiator with Tesla is that you have a higher margin than your competitors. And if you're willing to sell these cars at low profit margin in order to sell more, but you're not selling a ton of them, That's the issue here. Now, I'm a bull on Tesla, and I think it'll be fine. Where I'd be buying Tesla is if it gets down to $150 or less. Do I like it at $165? The answer is yes. I'd be targeting $150 or less, and it might not happen. If you're really bullish, buy it now, dollar cost average. The third stock is Wolfspeed, ticker is Wolf. Now, I'm going to explain what this company does in a second, so hold on. But they also reported earnings here recently, non-GAAP EPS, negative 13 cents. So this is not profitable. It did beat by 2 cents. Revenue was up 21.6% year over year and did beat by $8.62 million. So you had a beat on top and bottom lines. What's the problem? Well, again, we're seeing light guidance. If you look at the revenue, so for its fourth quarter fiscal 2023, Wolfspeed targets revenue in a range of $212 million to $232 million versus a $234.63 million consensus target. They're telling you their range is going to be below. Even on their high end of their range at 232, they're going to miss that consensus estimate of $234.63 million. So this one could see more pressure, and it is expensive. It's not profitable. Of course, none of these stocks we're talking about today pay a dividend. So 52-week range, the low just happened on April 27th, $44.25. You can see it's trading right now at $46.55. The 52-week high, September 21st, 2022, is $125.48. So no PE ratio, small cap, $5.72 billion. This does have 12.8% short interest, and I expect more pressure. I'll tell you my price target in a second. You can see a lot of the price targets here between $60 and $80 from analysts, which of course doesn't mean anything, but it's good just to give an idea of sentiment. So just real quick, if you're not familiar with Wolfspeed, this is a semiconductor company based in Durham, North Carolina. So we're talking power modules for customers and distributors to use in applications including electric vehicles, charging infrastructure, power supplies, solar inverters, and more. So this is going to be more in that energy space as a semiconductor play. The company was formerly Cree Inc. and changed its name to Wolfspeed October 2021. So Wolfspeed's down 50% on that 52-week performance. Price to sales ratio 6.25. Now it doesn't have a PE right now, but next year's estimate 422. So this is really expensive. For me personally, I want to buy this stock under $40, and it might not happen. Several members in Discord have been buying this stock below 50. That was the original price target, but after earnings, I've adjusted mine to 40 or less. Again, it might not happen. That's where I'm looking at buying Wolfspeed, ticker is Wolf. Alphabet Google just had earnings, and I did a deeper dive in the channel, so you can go check that out if you want more information. But the next stock pick here is going to be Alphabet Google. I own A shares, that's GOOGL. You can also buy C shares, it's GOOG. 52-week range, it got down to $83.34 in November 3rd, 2022. It was $122 on May 4th, 2022. Right now, it trades at about a 24 PE ratio. It's a mega cap, $734 billion. So this is one that was in that $1 trillion market club, no longer in there. I think Google Alphabet's doing some exciting things around Bard AI. I think they've done a lot of cost preventative measures to improve profitability and efficiency, and I think you'll start seeing that come to fruition. Some of that work start to show results for the company in future quarters. Now, with all these companies we're covering today, we could face a recession, and you could see lower prices. You kind of know where this one went. Always possible that you retest some of these lows. I really like this stock below $100. I don't think it's crazy expensive or anything at $105 or so. So for me, 105 or less, dollar cost average. I think it's a high quality company. It's one of those big cap conglomerates, mega cap tech conglomerates that you can sleep well at night knowing that it's probably gonna be worth more. It's got solid free cash flow. It's got a solid balance sheet, and a lot of investors are gonna flood to these type of stocks in this type of environment versus a riskier spec stock that's burning cash. So the fourth stock is Alphabet, ticker GOOGL. Now, so far, every stock that we've covered already reported earnings. This one reports earnings on May 3rd. It's Generac, ticker is GNRC. Now, this was a $300 stock in June of 2022, got down to $86.29 back late December 2022. It's trading right now at an 18.4 PE ratio. Market cap on this one's a small cap, about $6 billion. So right now it's trading at about $102. It does have about 7.52% short interest, so something to keep an eye on there. And earnings could certainly take this stock lower. You could see a 15% pop or drop depending on what they report. I think overall the market's pretty bearish and they're expecting bad results. So it could be one of those things where maybe that happens and it goes lower, maybe it goes back in the 80s or 90s, but there's also a possibility that they could actually beat and the stock could pop. I'm just looking at this as a long-term investment. Look at the valuation. Price to sales ratio 1.38. The PE based on next year's estimate 11.8. 11.6. Now this company faced some challenges when you think, number one, margin compression, but really when you think of what their business is about, they have to rely on different parts, manufacturers, installations, and there was a lot of supply chain issues, logistics issues that impacted the company. And I don't think they're completely out of the woods yet. This is one that I'm thinking if I'm holding for say 3, 4, 5 years and I'm buying at an attractive price, I think this is one you could make some money on. So be careful with this. Again, earnings are May 3rd. I would probably wait for earnings and see what happens. If the stock sells off more, it could be an opportunity depending on what they say on the earnings call. Tread lightly. Ticker is GNRC. Now the last video I covered was Amazon earnings, and it was funny. This stock popped 12% after hours, and then it turned around, reversed, and went to red. If you have not seen that video, go watch it after this. I'll put a card up so you can go check it out. So Amazon got down to $81.43 in this year, January 6, 2023, and back in August of 2022 it was around $146 a share. This one does not have a PE ratio, and the issue really came down to cloud. So cloud has been decelerating, and what happened is the CFO came on the call and said, well, actually cloud's decelerating even more in April. So when you get earnings, that's going to be lagging first 3 months. So you get earnings for this quarter, it's obviously January, February, and March, and then, oh, by the way, April we're decelerating more, 500 basis points, and then the market sold off pretty aggressively, and it went from $118, closed down at $105. You can see it's even down a little bit after hours, $105.29. This is a stock, 105 or less DCA, preferably less than $100 for Amazon. Go check out that other video if you want more details about the company and the future really of AWS and Bedrock AI. There's a lot of exciting things happening, and this will have a future growth story. It's going to start coming to the other side, I think, towards the end of this year. And I think if you're holding this for multi-years, you're going to be happy with Amazon stock. So I've got one more stock pick. Again, if you're new to the channel, subscribe, click that bell for notifications. I'm going to be doing another video like this here in a couple of days that's going to be dividend focused, so dividend growth stocks. And if this video was helpful, please give me a like, drop a comment to help out the algo. I encourage you to check out our private community. That's patreon.com/firedupwealth. And this video was brought to you by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. A reminder, Motley Fool doesn't tell me what to make, what to tell you, what videos to create. They're a great partner. Go check those guys out. This is probably going to be the least known stock on the 7 today. This one's Everi Holdings, and it got down to $13.52 here December 22nd. It was a $21 stock back in August. This is trading right now at a 12.27 PE ratio. It's a micro cap, $1.34 billion. It's got about 2% short interest. A lot of the price targets on this are $30 and some are even higher. You can see here, B. Riley trims Everi from $35 to $31. I'm not saying it's going to go to $31, but I do like this stock. I've got a video on the channel that does a deeper dive. If you're not familiar with Everi, so develops and supplies entertaining game content, gaming machines, and gaming systems. This is really about gambling. And they also have a fintech solution, part of their business as well. We're talking about casinos, so slot machines and so on. If you remember that game show, Press Your Luck, they have a game, Press Your Luck, that's a slot machine. My wife and I played that last time we were in Vegas, absolutely loved it. They got some great games. And you'll probably go to a casino and you'll see the Everi logo next time you visit. Price to sales, 1.74. And then the PE ratio based on next year's estimates, 12.9. One quick thing that's interesting about this company, when you look at the management team, the board of directors, a lot of them are part of VICI. So if you're familiar with what that's all about, these guys are very connected to Vegas. I won't be surprised if this stock doesn't get bought out at some point because I think it's undervalued at $15 a share. For me, dollar cost average around this price and lower. If this video is helpful, make sure you subscribe, like, and comment. I appreciate your time and attention. Have a great rest of your day. Take care.